Good morning. So, I'm a terrible trader for a number of reasons. I've been making different trades during the day, um, sometimes without a take profit, the idea of letting it run, sometimes with. But what I'm finding is that I have a very particular psychological issue, um, and that I can't seem to leave a trade open long enough to ever hit my take profit, ever. I just can't do it. I don't know what the deal is with that. So, what I'm going to do is I'm sort of in practice mode here, and I've been watching a bunch of videos and thinking about this a lot, and I think that there's a difference between optimal trading strategy and optimal trading strategy for a beginner or for somebody who's trying to actually improve and get to the point where they're consistently profitable. So I don't think that somebody who is not yet consistently profitable should be trading the same way as somebody who is. I don't think that that's a good idea. And part of the reason for that is I know a lot of folks will espouse going for 1 to 2, 1 to 3, 1 to 4 risk reward, trying to get bigger moves and talking about the odds and how well if you get the one good trade and it makes up for all your mistakes and all these other things and I think that that's a bad way to look at it. I think for psychology's sake that anyone just starting out probably should only be trading 1 to 1 in terms of risk reward, and I think that just learning how to do that properly and then learning how to uh, practice your edge, whatever it is that you have. I mean, for me, it's just, um, it's discretionary. It's not, I don't necessarily have a system. I can go back on FX replay all day long and do fine. Um, maybe occasionally have a bad streak or something, but uh, I don't seem to have any problem getting in the leaderboard on the battles or going back and back testing stuff, and I do just fine, and I don't have any of the psychological issues that I do while I'm trading live with real money. So, what I'm going to try to do here is give myself as much chart time as possible in terms of experience by sticking with, say, the 5 minute, which is really the lowest time frame you could possibly use, and doing a lot of one-to-one scalping, with the idea being that um, even if I'm making bad decisions and my edge is garbage, I should be basically close to break even, which is a lot of survivability. So I'm sort of going to be trading for survivability's sake and not necessarily for pure profit's sake. And at the same time, knowing that in truth, I do have an edge, and it should show over time. I should be able to do fine. I should be hitting, maybe 3 out of 5 one-to-one trades. I should be actually hitting those, and that's basically true from what I can tell. If I go back and look at yesterday, for example, um, I did have a I did have a swing trade that got blown up by the news, which is not that surprising. Um, but I made a number of smaller trades that were maybe 15-minute chart scalps, and they were 1 to 1s, and I couldn't hold any of them. And if I had just let all of the ones that I set up actually go to the take profit or the stop loss and not touch them, I would have actually would have made money or at least broke even yesterday. Would not have had a loss. And of course, yesterday I ended up just burning money. So it's just not. This is something I really need to work through and practice with. So I'm going to use this as the method. I'm just going to take this off the 5 minute chart. I'm restricting my pairs down. As you can see, what I've done here is I've only put the pairs on the board. I'm just using this as a reference just so I can look at the index. But these other four up here are the only four currency pairs that my broker has a 50 to 1 leverage with. So apparently, there's a lot of restrictions for regulated brokers in the U.S., and it makes it difficult, I think, for people to actually make money in forex. They say they're protecting against we're protecting people against using too much leverage and blowing themselves up. But there are a number of strategies that you can use that require a lot more leverage, like sort of dollar cost averaging and things like that. You just really can't do very well with only 50 to 1. And also on the 5-minute chart, using less than 50 to 1 leverage, you're not going to be able to. Your trades are going to be too wide. Like when you look at this up here, you can see this is a two-legged move, and then you have like 3 or 4 bearish bars. So you can see, okay, at some point this looks like a bearish channel, and it's time to get in. And I actually did short this yesterday, and this was one of the trades. Let me zoom in on it. This is one of the trades that, of course, I just absolutely could not seem to hold for the life of me. So I ended up shorting in here. And then as soon as this green bar occurred, oh my, and this thing started to whip up and come down again. I got out. I decided to put it break even because I didn't want to risk anything. And really all I needed to do is just sit on it and let it hit the take profit, which it would have easily hit. So, but this is an example of that. If you have less leverage, you're not going to be able to put a position on to risk enough. For example, I want to risk generally maybe around 1%, 1.5% on a trade, one of these 1-to-1s, and just sort of keep doing that, keep flipping that coin. And it's hard to do that without enough leverage because you end up needing it to move more. So with that's what I'm doing here is I'm only limiting myself to the stuff that I've got enough leverage to actually do 5-minute scalps with. So that's what I'm going to be doing. We'll see how it goes. I'm not sure that. I think really the purpose for this is to just. I really need to break myself of this habit of closing stuff out early, or of just constantly moving things to break even and then having it getting hit. I mean, I'm aware of the fact that a good chunk of the time when you make you move something to break even, you're doing it too early and it ends up retesting the exact spot where your stop is. That just seems to be how the market behaves. So I'm going to do that. A lot of these are they're not that hard to guess. You can see in terms of the trades and the reasons to take them, spike and channel, not a big deal. Spike and channel, and then trying to convert itself into a trading range, which it starts to do here. So I mean, this is a really typical thing. Now, obviously, you probably wouldn't have been trading in this news, and I should have paid more attention to that yesterday. But you can always go on the calendar on Forex Factory and see this stuff beforehand and just stay out of its way. So, and generally speaking, a spike like this, especially if it's above, I don't know. But generally a spike like that is not necessarily bad, a good percentage of the time, especially if there's some follow through, like you see there's a spike, but then this second bar closes higher again. That tells you you're probably gonna get into this kind of a channel thing, and then it's gonna convert to a range. So you probably would have been able to get away with a long here, getting out in here, and then maybe a double top short here, which you may or may not have enough room. You probably would have had enough room to get a 1-to-1 out of that. And then you could have maybe even taken along here thinking that, well, okay, here's your first two-legged pullback from the spike in channel, and it's probably going to try to convert itself into a range, which it started to do, but then this piece went a lot higher. But you would have taken this long and gotten out there and then sort of watched that, I think. So, um, so I mean, the trading ideas aren't that difficult. I've studied a lot of Al Brooks stuff. I don't, I don't. I'm not even sure the strategy matters that much when you're doing one-to-one. I think that just making sure that you have something giving you an edge that on the trades that you take um, is what you're doing. Uh, looking at stuff and just using your intuition, saying, well, like here, I probably would have been in a trade, but maybe if I hadn't taken this one, you come across and see here, it's definitely part of a range, but then you see here, oh, here's a bounce off the EMA. Maybe this is going to go higher, and it did. So this was another thing. And again, most of this stuff is not certain. It's not necessarily 50-50, maybe 55, maybe 60%. It's hard to say. But you find the stuff that has, slightly higher than 50-50 probability, and you're just doing one-to-ones, and that's it. So over the course of a week or 2 weeks even, you should be generally making out, and that's kind of the idea. So, all right, we'll see what happens. I'll talk to you next time.